As rupee tumbles to as low as 81 mark and dollar gains strength, how can investor make the most of their current environment? To discuss all of this today, we have Feroze Azeez, Deputy CEO, Anand Rathi Private Wealth Management. Feroze, good evening. Welcome to the show. First come first, tell me something about the depreciating of rupee. Does it really bother the RBI? What, according to you, were you able to grasp from the commentary last week?
Kavita, of course, 81 rupees from a perspective of the psychological mark of 80 being breached has an impact. As RBI also said, RBI is looking at it more optimistically, looking at how we have not fallen as much as the rest of the currencies, gives a little ray of hope. Relative to the rest of the currencies, we are significantly better. Like last year, September, we were at 74. Today, we are at about 81 and odd. So point is that the rest of the currencies like Japan, Japanese yen, and so many other currencies have depreciated significantly more than us. So the RBI commentary very clearly brings out a little optimism from a relative standpoint. One. Point two, I think our currency depreciation on account of crude oil prices, especially after the Ukraine war, which has created a huge dent in our deficit, especially the current account deficit, has been now addressed with crude oil coming down. For every $1 decrease in the crude oil prices, we save about $2.5 billion. So the kind of fall we have seen in crude prices almost saves us $50 billion in our deficit. So I think RBI was a little more optimistic given the fact that crude oil prices have now eased off, unlike they were a few months back.
Sure. But then what are the triggers that you are looking at when it comes to rupee and its depreciation? And what is the kind of strategy one should be adopting, or you think it's not the right time to actually rebalance your portfolio in terms of depreciating currency?
Kavita, very valid point, because if you're dealing with Indian rupee, you need to be, every investor or every Indian, not just an investor, needs to be worried about his purchasing power in the form of rupee, because there are so many commodities we end up using on a day-to-day basis which are imported. Like for example, a phone can have a price impact because of the conversion rate. So it's not just an investor phenomena, it's a every citizen phenomena. So it's a very valid question in terms of what are the triggers an Indian should look at from a future standpoint when it comes to INR. So I personally think there are three things. One is the kind of foreign outflows. See, because RBI maintains two accounts for foreign currency, which is called the current account and the capital account. The current account is that account where monies come in and go out. Like if the foreign investor invests or redeems money and takes it back, or NRIs send money to India to invest, that's counted in the capital account. The current account is my imports minus exports, which today is about almost $25 billion of deficit. So to come to your pointed question, crude oil prices, one key trigger. FII monies inflow and outflow. First 6 months, we lost 45,000 crores of money from FIIs just from the listed space. So that has stopped. FIIs have now become net green, almost, barring September, a few days. So that's the second trigger. The third trigger, to my mind, is the interest differential between the US and India is narrowing, which is a very good long-term news for Indian rupee. So net Indian citizens should not expect more than 3 to 4% depreciation per annum, which is what has happened in the last 10 years. Per annum, 4% depreciation. 15 years, the depreciation has been 2.86% of Indian rupee, and that's what is the long-term dent you should expect, and that's only fair for an emerging market currency to depreciate by 3 to 4% every year.
About investment instruments, Feroze, which are the ones likely to be impacted if you have a currency play in it?
Kavita, that's again from an investor standpoint an important question. If you buy gold, you're automatically buying dollar. You may be looking at gold in Indian rupee, but it's a global asset. If you buy a global fund, you're again buying dollars. You may get your NAV in rupee, but Mind you, the NAV is actually in dollar. It is computed in rupee and reported to you in rupee. So if you buy an international fund, you have bought dollars. So that's point two. Point three, if you bought stocks using a online platform which you use your liberalized remittance scheme limit of $250,000 each of us have every financial year, that's again going to be impacted by your dollar and rupee exchange rate movement. And if Indian rupee depreciates, all these three instruments will have a benefit of a price appreciation because they are negatively correlated. If rupee depreciates, these three which I mentioned just now, Kavita, will appreciate almost 1:1.
The long-term goals that you've lined up might just go out of your alignment because of currency depreciation. Should we take immediate action to tackle that?
Yes, Kavita, if you have, see, for example, there are some goals where you need dollars, right? If you want to do a global holiday, you want to send your child to be studying abroad, especially higher education doesn't come cheap. If you're looking at MBA in UK or in the US, you're okay with UK because GBP has depreciated significantly more than Indian rupee. But if you're sending your child to the US, suddenly you have a 10% extra money to be arranged for if you have not invested in dollar terms. So most of us might have some global goals. So at least to the extent of global goals, you should have your money in the three instruments stated just now, which is gold, using in stocks or bonds abroad, or global funds from the mutual fund route. So should somebody do something about this depreciating rupee? The answer is yes, and urgently so if you have a global goal just around the corner.
Thank you so much, Feroze, for removing time and helping our viewers in their financial planning.